Motilal Oswal Financial Services with us. You know, a couple of years back, he told us that the Sensex will be at 1 lakh. Yesterday, we hit 80,000. So he's going to up his targets. So that's a conversation coming up after a quick break. Stay with us.
SEBI and all, they are going by what panel is saying. The issue is that try to understand what are the incentives.
Welcome back. 100 points higher on the Nifty, and we are basically making new milestones. So let's talk to somebody who's seen many milestones. I mean, yesterday I was saying that when I started reporting on markets, the Sensex was at 5,000 levels. We are 16x from that point on. But I think we have somebody who's seen, markets since pretty much inception in the current modern format. We have Raamdeo Agrawal, Chairman and Co-founder at Motilal Oswal Financial Services, right here in our studios. Raamdeo, great to have you with us here. Thank you very much for your time.
Very good morning.
It is a very good morning, right?
Yes.
Every day is a good morning nowadays.
80,300.
Last, a couple of years back, you told us Sensex 1,000. We bridged the gap.
Yeah.
So we need a bigger target. When you come up closer, you need a bigger number.
So you give me longer way. I mean, what is happened after 10 years, I'll give you a much bigger number. So, it's just a compounding. See, I started my career when it was 100.
Yeah.
So in 1980 only I bought my first stock, and that time Sensex got started at 100. Today is 80,000. Do you know what is the rate of compounding in 44 years? Guess?
20%.
No. This is what is all about compounding. It's 16.4%.
Yeah.
Year after year, for 44 years, I have seen this market growing at...
Compound.
I didn't know that it's 16%. I thought it was 15%. This is a 15% country. India is a 15% country. So, I have seen, like every 5 years it doubles. Like from 40,000 to 80,000, it has become in 5 years, exact. So, it's about 15%. And longer term is also 15, 16%. So, there is no reason to believe that going forward it will be anything significantly different. It might become 14. It might become 16. So if you go at 15, let's keep the base rate 15. In 5 years flat, 2029, you will be 1,60,000. Is that a big enough number, or we should double it again?
I want to just, so you take a slightly longer sweep of time, and that's the way to do it. You even out and iron out a lot of the fluctuation and volatility. And I think you put that out beautifully with that sort of example. But slightly near term, this is also the fastest 10,000 point move.
Yeah.
Now, of course, I mean, you know, from going from 70 to 80 in percentage terms is very different from going to 10 to 20. I mean, so having said that, this has come in about 130, 140 days.
Yeah.
This last 10,000 points.
Yeah.
So is it just your
But
thoughts?
You can have a deep correction up to 2,000 points, and then it will get nullified in the sense that, see, what happens is the base effect comes. See, first 10,000 to from 10,000 to 20,000 is a doubler.
Correct.
Obviously, it will take 5 years. But 70 to 80,000 is just about 14%.
15%, yes.
So 14% and 100%, it is going to take different times.
No, but the other aspect, we've been discussing this, is this whole liquidity gush, right? This massive tap of domestic liquidity, which is why this is a very different market from, you know, where we were maybe 10 years ago or 15 years ago. Does this worry you, that there's so much money chasing stocks? Is that in itself maybe a risk that people don't want to look at?
No, why worry you? It's the happiest situation in my 40 years of career.
Okay.
Yeah, it is the happiest situation. When actually retail, which is, see, in 1.4 billion people, at least we should have 500 million people in the market. We still have only 160 billion or 100 billion. So this journey of inclusive development of the markets, because the risk capital is going to come from, not from the top end of the population. Risk capital will come in a truly distributed way from across the country. And that is the revolution which is on. Say 3,000 rupees SIP, 5,000 rupees SIP. So the guy who is giving, say my household servant or somebody, he or she doesn't realize, I mean for her also it is very small. Say she is contributing, say something like 35,000 rupees a year. If that goes down by 20-30%, I don't think she is aware of it. And it really matters to her. But that 30,000 rupees all collected in the SIP becoming 22,000 crores per month, means about 240,000 crores, 2.5 lakh crores per year. This entire thing is available to our entrepreneurs.
Actually, the average SIP size, I think, is about under 3,000 rupees.
Yeah,
so it is very, very small.
Yeah. So what I'm saying is, risk is distributed. The best thing to happen in any equity market is when the risk is distributed. The whole concept of Joint Stock Company came as to distribute the risk. So this is the ultimate form of distribution of risk, and that's how our quality of equity capital, which is available to my entrepreneurs, finally, the corporates, is very high quality.
No, but that's at a much broader sort of thematic level, and I couldn't agree with you more. It is a revolution that we're witnessing right here in our lifetimes. But just in the near term, in the short term, given the pace of money coming in mutual funds and the fact that the spectrum of stocks, and also there are definitions and regulations, right? So the spectrum of stocks, your basket is pretty much the same. So is that a challenge?
No, you are seeing a lot of supplies coming in from existing promoters and FIs. FIs have been supplying for last 1.5, 2 years. Now they also seem to be tired. Now it is all for the new companies which are not listed. So 100% owned unlisted company, they are coming with the IPO. Almost every day there is 1 or 2 IPOs. I think it will be a record year of maybe 200 IPOs or at least 160, 170 IPOs. Almost every other day you will close 1 IPO. And there is no season in the sense that entire 365 days it is open, which is a very different change. So supply line is building up. The good thing about the market, India, is that there are 3,000-4,000 companies listed already, and they all can use a lot of money as the demand builds up for their respective products and services. So I think there is a lot of demand, and then on top of it, the owners are there who are sitting on 50-52% of the ownership. So they won't mind shelling out 10% of their holding to the retail public. Now 10% means, see, today market cap of the market is about 440 lakh crores. 10% means 44 lakhs. My flow is just about 6 lakh crores. So if entire thing has to come from existing, if you raise the prices too much, the existing owners of the companies, they will supply you 10%, which is good enough for next 5 years. So there is no dearth of supply. Samsung will come, Government of Singapore will come, Jio will come.
Hyundai is coming.
Hyundai is coming, will come. There is, see, if you sell a rupee stuff for 1 rupee 20 paisa, 125 or 150, supply will come. You should have that faith that somewhere it will come. In what form it will come? Existing, new, old, and it has a tremendous impact on the private equity, venture capital, the appetite for unlisted. Appetite for unlisted is so high, and that is where the money is going into the startup of new companies, you know. Unheard of cities, you know, you go to tier 3, tier 4, there's so much of excitement about becoming corporate, getting organized, wanting to do private equity, wanting to do kind of public issue, which is what is the revolution. I am not so much about the 80,000 and all. That is what is the reflection and fun for us. But actually, what is the second order effect of really? It's like a water, Ganges water coming to desert of Rajasthan. See, immediately it might create flood, but eventually 10 years henceforth, entire Rajasthan would become green.
Wow.
That's the effect which this will have.
Hi Raamdeo, good to see you. And I'm just doing the back of the envelope calculation. 80,000, 1,50,000 in the next 10 years. When my kids go to high school, it'll be at around 3 lakhs. I'm quite pleased with that thought. But I wanted to ask you this: given the kind of participation you're seeing and the revolution that we're seeing, do you think it's time that we see some kind of participation in either house of the parliament? From either the brokerage community, the stock market community, because the participation is there. We're going through a revolution. Do you think that's the time has come?
I think we should have at least one state cabinet minister for capital markets. Reporting to the main FM, there should be one dedicated, and he should have office in Mumbai rather than Delhi. It is very important that his office is open. I think SEBI is doing that job more or less, but still, I mean, at a political level, because SEBI also reports into, I think, president or something like that. But at political base also, there should be somebody who is fully dedicated, listening to the voice and concerns, ideas, opportunities. Because see, capital market, the capital market opportunities is amazing. Only US has this very vibrant capital market, and that's why US is what US is. So India today with $5 trillion plus kind of market cap, we can be in 5 years flat. See, your market cap index grows at 15%, but market cap grows at about 17-18%.
Yeah,
because of new issuance and all.
Yes.
So 18% means in 4 years flat you'll be $10 trillion. Just think of $10 trillion market, and the entire market, fortunately and unfortunately, is just in South Bombay, south of Bombay, south of Bandra. So you imagine what kind of intensive activity you're going to see in this city.
And I'll tell you, I mean, I was talking to a gentleman who heads a large sort of SME portfolio at a large bank, and he travels and meets companies in tier 2, tier 3 cities, etc. Everyone wants to raise money.
Yeah.
Everyone is thinking of doing an equity issuance, and it's an incredible pipe. Companies we've never heard of.
Yes, yes.
These are small size, 100, 200, 300, 500 crores, up to 1,000 crores essentially. But it's a big pipeline of companies which we will see over the next couple of years. Although, Raamdeo, sometimes, having seen markets a long time, you sometimes wonder, is this really happening in this size and scale? And I think that is natural to wonder sometimes.
Yeah, for me also it's first time. In the sense that we have seen the markets going up and down. It doesn't go down now.
Yeah.
See, every time, like in 2000, see, I think real fun was 2003 to after 9/11 collapse in 2001. It was kind of depressed. Motilal Oswal also incurred loss for 2-3 months. So that was a bit of cautionary time. But after that, from 2003 to 2007, it was amazing time. But this was a global boom. You go to US, you go to China. I mean, when I used to go to Hong Kong and used to open the newspaper, I said, "Hamare yahan boom hai, yahan to super boom hai." Like the headlines were so different. We were growing at 15-20%, they were going at 40-50%. Now they are growing at 5-10%, we are going at 25-30%. So this is truly India decade. We got to play it very, very cautiously, I'm telling you. Particularly the capital market card.
Yeah.
Because it is not understood properly.
And let's talk about that. Yeah. And I think at that time retail investors were not, I mean, they were nowhere, maybe, what the size. It was completely FII driven.
Otherwise they'll go to gold.
With our SIPs and our first funds, I remember back then.
They will go to gold, I'm telling you. Or they'll go to real estate, which is again a mess. So all the savings must come here.
So what do you mean by that? When you say you've got to play it carefully, in terms of, I think what you mean is regulations, etc.
Yeah, no, our regulators have done an amazing job.
Yeah.
I'm telling you, this boom is bigger than 92 boom. Just that in 92 there was no SEBI. So today we have SEBI, we have RBI, we have digital tracking, we have everything perfect. But just that, because unless something is broken, don't fix it. My sense is that something is.
So what is your fear? Let's approach it from the other side.
My fear is that they should not do anything, which can disturb this tempo of shift of savings. From, say, now it is happening from bank deposits to, say, mutual funds. This is a wonderful thing. Now they should not do anything whereby the other asset class, like gold, which is unproductive, people should not become, by mistake, they should not make gold or real estate investing or some cash-based assets buying more attractive compared to stocks.
And who's the they? Are you referring to regulators or the government?
I mean, power that be. I mean, I'm not pointing out anybody, because a lot of people have a lot of powers. RBI has its own power, SEBI has another power, government of course has a lot of lawmaking powers. I mean, all that fiscal measures like your capital gains and all those kind of stuff. Then this side monetary is there. Isko paisa nahi dena, usko paisa nahi dena. Ye band kar do, wo band kar do. Then SEBI saying. So, मैं क्या बोल रहा हूँ कि see, they have done so far. They only have brought it here. So all the credit to them. But having got it here, don't get scared of what you designed for when they are coming.
Yeah.
See, you designed for the inclusive development of the capital market. That's truly happening. Till the complaint comes from the consumers themselves. I mean.
So before we start talking markets here and now, just to complete this point, tell us about the budget. We're talking about not fixing what isn't broken, right? That's what you're saying.
I would confine
from a capital market perspective, because that's one big fear. There'll be some tax change, there'll be some capital gains change.
Yeah. So that's where.
So what's your wish list when you want to?
I have.
Don't spoil
no
the
change is the best thing. No change is the best thing. But actually, they should make it even more attractive for the people, not for me. I don't want any tax concession for sure. But the masses, I mean, wherever it pays, say PMS people are doing. So PMS, I mean, that's not a budget issue. I mean, that is all for the maybe SEBI or somebody to reform. But wherever little points are there, in terms of fraction with the, with the development of capital market, say taxation issue. This taxation is always a big pain point, say pass through hota hai. First they'll say this is a pass through, this particular category is pass through, and then later on they say 10 years back it was pass through, but as per this is not pass through, and hence you get into litigation, and that litigation never gets over. So one is that of course some mistake could be committed by the intermediaries, but I think there should be an extremely good settlement system out of the court settlement system. Okay, we go and accept this happened, but looking back it is a mistake, but today, okay, let's sit across and pay some fine or something and settle it and done and dusted types, so that we can move on. Otherwise, there are two chart accounts, consultants, and people are busy. You keep issuing notices. So I think it must be made very, very fraction free. The capital market should be the most friendliest capital market in the world. Should be India.
So completing the loop on the budget. You say no changes. That's
broadly,
from a taxation perspective.
That's not be changing. I think we are in a very good equilibrium.
Yeah. So. Anything just to complete that thing on the budget? Anything else you are expecting? Not just capital market, from a budget. Will it be a big one? Because this is the first time we will hear about them talking about.
I would expect that there should be some boost to the consumption. See, you want private capex. Government is doing all the bits of its. You see the GST number of this month. It is 7.7% growth. If this trend continues and it goes to 6% and 5%, then you have a problem in the health. Because your GDP is growing at 10-12%, your GST is growing at 7%. It means it's only first month. So let's not read, because it was at the middle of the election and super heat wave. It should recover hopefully next month itself. But if it doesn't recover, there is a problem with the consumption. So you have to address to the consumption. They will have all the high frequency data, not with me, and they have all the super economists. They will say how to build this up. Because the moment consumption is there, Indian entrepreneurs are so smart. You want burgers, people will supply 1,000 types of burgers. You want cars, people will, you see, you don't have to tell anybody, all kinds of cars are coming here. So you have to just give indication where the consumption is, and investment will come. Because infrastructure is something which only government can do.
So some income tax relief for something like that should, you're saying that should do?
There are two ways. One is that put more money in the hands of the poor guys, or not poor.
The salaried people.
Non-urban.
Tax-paying people.
Tax-paying people. Okay. You put more money. The guys who are not paying tax, in any case, you have no control on them. The guys who are paying tax, you can reduce that, like I would say, up to 12 lakhs. No tax. I'm a farmer. No tax till 12 lakhs. Matlab he should not know where is the income tax office like. 12 lakhs rupees means a lakh rupees.
This is a first. This is the first time I'm hearing someone who's a veteran of the capital markets saying it'll be okay if you go to that dramatic extent, saying no income tax till.
See, 5-6 लाख है
वो तो अभी की exemption limit है, yes.
झंझट है ना कि भी आपका वो 10,000 रुपए का आने का है, 5,000 जाने, एंड फुल इनकम टैक्स डिपार्टमेंट फिल्ड विथ ऑल दिस केसेस, मिलियंस ऑफ केसेस गोइंग. आप 12 लाख तक साफ कर दो. सो इनकम टैक्स ऑफिसर हैज रिलेशनशिप ओनली विद द गाइज हु आर अर्निंग एक्चुअली 12 lakhs प्लस. तो आपका पूरा पॉपुलेशन साफ है.
This is a mindset change, sir, because usually the moment something like this would happen, the market would fall saying, oh, this is a very populist measure, it's a very populist government.
Market, देखिए, you cannot build budget for market.
Yeah.
Market has its own mind.
Yeah.
Okay. जिस दिन बजट आएगा उस दिन यदि FI ने $20 billion बेच दिया कोई कारण से, तो आप कितना भी अच्छा बजट लाओ, खराब हो जाएगा बाजार. So forget about the market. No, you can't run it for the market. You have to run it for what is good for the country.
Absolutely.
You know, Raamdeo, similar time, exactly 1 month ago, we were speaking when the market was 3,000 points lower from here. Shows the kind of recovery that we've seen in the market and the power of retail as well. But since you briefly mentioned mass, I want your take on the mass segment. Are we coming to the end of the K-shaped recovery that we saw? And there's plenty of demand for stocks. But are we seeing demand now for shoes, for soaps? Is that coming back?
No.
Is there recovery on the cards or not yet?
No, in fact, it's slowing down. What I see, I keep getting bits and pieces of news. But today morning, I was talking to 1 or 2 businessmen. They are saying that like one shoemaker has gone half. He has retained half of the staff because there is no demand for the good quality shoes. So maybe it is going to some foreign brand or something. But per se, there is no. 8% GDP growth for 2 years, and still there is no boom in HUL, Nestle, and Marico and Britannia. People they should not be able to punch enough biscuits for 8% growth economy.
Now, let's run through a few other things.
Yeah.
Capital market plays. It's been a long-standing theme of yours.
Yeah.
Does it stays absolutely rock solid?
It becomes even bigger.
Bigger.
Let's see budget, what
all these transaction charges and all that, what happened recently?
They're all passing. See, nobody is trying, authorities are not touching the customers. They are making only the wrong incentive which is there for the intermediaries to expand the volumes big time so that they can get their credits. They have simply stopped the credits. So now intermediaries will respond in whatever possible way. Maybe they will increase the charges or
so it'll get through, it'll be tidied over. It's just
part of the development process.
Okay, private financials. What's the view now? I mean, because that's private financials, private banks. Banks actually, financials. You've been a big bull, and HDFC Bank, I mean, there was a bit of a trigger there as well. What's the view from here?
My sense is they're going to do very well because this is the best time for the banking. What is happening with so much of equity coming into the corporate world, the quality of credit given to the entire corporate world has significantly improved. And the prepayments and the quality of corporate cash flow is so good that banks don't have to worry about the corporate book, which is almost 50% of any, about 65-70%. So that portion of the lending, which is bulk of the lending for banks, is fantastic, and the quality is improving day by day. You know, so clearly banks are in very good shape. The only problem they have is the liability issue, in the sense that if you have 15, 16, 70% credit growth, you need that much growth in the deposits also. And deposit growth is very calibrated, and about 11-12%. So their cost of deposits are going up. So I don't know how. RBI is clearly on top of it, and they have a lot of tools to provide as much liquidity they want. So I'm sure
they'll another sector I wanted to, because there's a fund, the defense fund, the Motilal Oswal Defense Fund. Has it started?
I think
deploying?
From yesterday it started trading.
Stocks are higher today. I can
Again higher?
No, I'm just saying.
I don't know. See, they're done. I think yesterday was the first day, so I don't know whether fully it is done, but it gets listed.
But you know, how do you view this space? Some of these stocks are up 10-15 times. So one school of thought would be, now it's, you know, we are starting for the next 5-10 years because it's got a tremendous runway. The other school of thought would be like, these stocks already went up so much. So give us the rationale. I mean, on a space like defense, which has done so well, and now you'll come out with an NFO.
So see, all the PSUs, they were discarded for, I would say, 10 to 12 years or maybe 15 years. They literally came to zero performance 3 years back in our wealth creation study. And so it is making up for the last 15 years of lost valuation. I mean, things came from, say, 12, 13, 15 P multiple to 2, 3, 4, I mean, low single digit P multiples. Like quality, I don't know, even now it was a single digit.
8 and a half.
9. So it was, this is despite doubling, so it was 3, 4 P multiple. Your HPPP house is still at about 5, 6 P multiple or 7 P multiple. So clearly, the PSUs were depressed beyond anybody's imagination. And now under this government, I think the PSU profit performance is also very good. All the PSU banks which were in dire straits, absolutely, till COVID, post-COVID they have come back. They cleaned up the book in COVID. And now they are as profitable as private sector.
Yeah, if I got the number right, I think the entire PSU basket you're getting 15 lakh crore, which has gone to around 70 lakh crore. But the good news is the profitability as well has gone up as much. So on a PE basis, it's not still that's not changed.
The area is power, Raamdeo ji. Power as a space, utilities and equipment makers and financiers. Do you like that space as a fund house, or you think it's a bit overdone now?
There is a lot of choice, but yeah, I mean, see, it all depends on the stock. See, I'm not anymore picking stocks, you know, and so I'm not at liberty to talk to you about individual stocks. But the opportunity is there for any company which has a solid business model and the desire to grow. You know, I mean, some of these PSU financing companies, all the private power sector capital expenditure which is coming up, a lot of it will go from their books.
You know, but on a related note, because of this kind of expansion, if you look at the industrial space overall, which has worked so well, right? It's become it used to be a value play, now it's like the high momentum play in the market, where stocks like ABB and Siemens, they're trading at 80 times, 90 times, 100 times forward multiples. How should investors approach it? I mean, thematically, yes, we understand, but when you see these prices...
Yeah, there will always be some segment of the market which you don't understand, or I don't understand. If you don't understand, don't bother about them. Because they're enough to play some other place.
But overall, when you talk capex, industrials, what's your
so they are the highest quality capex companies, Siemens, ABB and all, because they have very long-term franchise. It's not, you know, one season here and there. They are the guys who have, first thing is, they're not very capital intensive. They're much more software driven, services driven. They have IPR, what they do, nobody else can do it. So second, as the India goes from say 4 trillion to 8 trillion, your size of the capex boom will be 3x, not 2x. So who are the guys? There is nobody, no substitute coming for them. So they are going to get more complex, bigger orders in their books. So, and then ROE is very high. Their margins are now from 8-9%, they are at 14-15%. So everything is going well for them. And even globally, now the parent company, if you see these companies, European companies, total setup, India is the only place from where they are getting this 25-30% growth. And now it has become significant in size. And more than the operations, market cap has become significant in their size. A lot of people, they are selling here to buy back in their parent organization. So now they cannot ignore, because this is India as a powerhouse. You know, this is a decade for India. And it will be on the back of a lot of this capex, which will be helping them big time.
All right, Raamdeo, just one final word. You know, we have spoken about consumption, about capex. The other C is cement, and you have spoken about this in the past as well. The consolidation drive is picking up steam, and I've got my ear to the ground. I believe there's a couple of assets that will get gobbled up in the next 6-8 months or so. You've spoken about this in the past. How do you approach that theme? With the large are getting larger, the smaller ones are getting a better parentage. So how do you approach that? Because clearly this is a space that is seeing plenty of interest, a new player coming in there, and you've seen plenty of consolidation.
Yeah, so this is a very funny situation where consolidation is on and yet new players are entering. So there is no dearth of supply of the capacity. You know, so there has to be genuine shortage of cement, which is not happening. And this we are counting for the last 24 years. That demand is going to go up at this pace, supply is going to be constant like this, and hence there is going to be a big bang price increase.
Yeah.
So that has not happened, and I don't see it happening in near future.
So how do you approach the theme then?
Yeah, so I mean, if the stock is available at replacement cost of below $100, buy. If it is $150, $200, sell.
Right, well, that's straightforward. Raamdeo ji, great to have you with us here. Really appreciate it.
Nice.
So 1,60,000 Sensex by 2000?
29.
29.
5 years, doubling every 5 years. That's the formula.
2034, we're at 3 lakh.
All right, I'm just kidding, but wonderful chat as always. Thank you very much for being with us here. So that's Raamdeo Agrawal, Motilal Oswal Financial Services, with his thoughts on the market. It's a wrap on this edition of Bazaar and that special conversation. We are back with Chartbusters on the other side. Stay tuned.